let me begin with the cost. As being trained as an economist, I learned early in my Principles of Economics courses that there is no such thing as a free lunch. Okay? How can this be free to the end user? Well, it's really quite simple. Let's take the analogy of Orbitz, Expedia, or Kayak. How many of you have booked your own airline ticket online? Okay, I suspect most of us have done that.
Using Expedia, obviously.
Okay,
yes.
Expedia.
Thank you.
Pardon? Okay, I am.
Or booking airline on the internet. That only happens abroad. It doesn't happen in Africa. You cannot go to Liberia now or go to Nigeria now and go to Expedia and book a traveling trip. It's impossible. You've got to have a credit card. How many Africans have?
Let me combine that question with her previous question about mobile devices, because I think there's been a lot of innovation in Africa on mobile currency that's using mobile telephones as a means of overcoming the very challenge that you just described. But let's just take for a moment the example. I realize there are challenges of credit card access for some Africans. But in the case of the travel sites that one can use to book airline tickets, those sites are used for free, all right? In fact, to use your example of Expedia, which you used, Expedia explicitly states on their site, never a fee for booking, okay? Never a fee for booking. Now, how does Expedia make money? Well, after you book your airline ticket, what do they next ask you? They ask, do you need a hotel? Do you need a rental car? Would you like other kinds of travel experiences that we can offer you? Would you like to go on a cruise? They market a suite of travel and entertainment services. When you get to the end of that transaction, even if you say no to everything else, in this case, you use a credit card to pay for the airline ticket and/or the airline ticket, hotel, rental car, and so on. A portion, a small fraction of that financial service revenue is used to pay for Galileo, Amadeus, Sabre, or WorldSpan, which is one of the airline reservation engines that makes the Expedia experience possible. That revenue sharing model allows you as the consumer to gain access to the global air market, the global hotel market, at a very minimal cost. We are going to use a very similar business model. We are going to provide a digital platform for not only SMEs, but also major corporations. Every company can use this digital platform. In the case of major companies, they will access it not through the web, but through a non-intrusive integration of their existing system. That platform provides the basis for selling a whole series of B2B, business-to-business services. Financial services, the ability to finance the shipment of your export product to another country. Bill consolidation, currency exchange, commercial letters of credit. It provides access to insuring your shipment. It provides access to a whole host of integrated technology companies that may provide RFID or other kinds of technology services. Whenever those companies book a new dollar of revenue with any African company, GCEL will retain, actually it's the revenue sharing arm of GCEL, the World Logistics Council, will retain 10 cents of each new dollar of revenue, and with that 10 cents will deploy the system globally and ensure that every SME has access for free. That revenue sharing model is what makes it possible, but let me be very unequivocal. There is no cost to the African SME. There is no cost for the training. There is no cost to be borne by the African governments. All of that is made possible by having a revenue sharing organization in the middle of all of these organizations. Now, this brings me to a second important point regarding governance. What is Africa's stake in the governance of this? If you have a global digital platform that is making B2B services available, it cannot be monopolized. No one in the world will embrace a solution that is monopolized by one country or one company. Therefore, this core system will be delivered by 28 private sector companies. 12 will be technology companies, the likes of IBM, Siemens, Tata, and so on. 12 will be financial institutions, major banks. 4 will be global insurance companies. However, 7 of those companies must come by our design. They must come from Africa and the Middle East. Our presumption is that banks, insurance, and technology companies from the largest economies of Africa and the Middle East will compete to be one of those 7 gateways. We use the term gateway to describe those companies. But in the end, it will be determined under an equal opportunity, transparent selection process, what we call a request for license process. So there is equal opportunity for banks in Ethiopia, banks in Ivory Coast, banks in South Africa, banks in Egypt, all to compete for one of these 7 licenses. In the end, I suspect that 3, 4, 5 of these licenses could well come from Africa. That's one issue regarding governance and the fact that Africa has a voice. The second part is we have 4 regional logistics councils around the world. We already have one established in Asia, which is based in Kuala Lumpur. We are in the process of forming the Middle East and Africa Logistics Council. That Africa Middle East Logistics Council will have 7 directors coming from 7 different countries. And we are in the process of determining which countries want to participate in that governance of the Africa and Middle East Logistics Council. This governance, again, is very much by design. And the purpose is very simple. Everyone needs to share in the governance of this global solution. And we are providing seats at the table for 7 voices as a starting point for Africa and the Middle East to share their concerns, the concerns of African businesses, the concerns of African governments in the deployment and ongoing enhancement of this system. Now finally, let me give you an example from a market that may be somewhat similar to Africa. The short answer to your question is this system has not been adopted by any country. As Dr. Nancy indicated, it has the active support of more than 150 governments now, but it has not been adopted because one must first build the global governing structure, and then one must deploy it systematically and quickly across the globe. We have 4 deployment projects that will do that around the world. But to give you an example of a country that has shown strong support for this initiative that I think reflects many of the same development challenges one finds in Africa, consider India. India has enormous infrastructure challenges. They have a very high interest in ensuring that SMEs are prosperous and drive their future growth. And they are a country that is grappling with how you ensure everybody is online. We are partnering not just with the Indian government, we are partnering with the Confederation of Indian Industry, which is the largest chamber of commerce for India. They are our partner because they see enormous upside for their businesses in gaining access to global markets. They see this as a means of providing the tools the Indian government needs in order to make crucial infrastructure investment decisions. And overall, they see this as a means of advantaging what they believe must be innovation-led, SME-driven growth for India. For all of those reasons, they will be one of the first 2 countries in Asia to deploy this system. We will have our first Asia deployment between Indonesia and India. Those 2 countries, I think, both represent an interesting development parallel for Africa, and I think suggest that many of the concerns you have about development in Africa are likewise in their minds, and it's for all of those reasons they've chosen to support this initiative.